Today is Krishna Janmashtami, right? So it's officially the start of the festive season, and I guess good health, happiness, prosperity to everyone who's celebrating. For the market, it's been a festive season all throughout August, actually. I mean, it's been a good run so far. 5% higher in the month of August on the Nifty, 6% higher on the mid-cap index. So, you know, as Anuj was saying, I mean, little bit of profit-taking would not kill anyone, because I guess that would be the order of the day. The US markets ended flat. There was nothing much to take home from there. The Dow futures are under a little bit of pressure as we speak. But by the end of this week, the S&P 500 would have hit a fifth straight winning week. So big gains under the belt, even in the global markets. Brent crude is now above $96 a barrel. Fuel consumption is back, which is actually a good thing. So do keep an eye out on that. For our own markets, FI sold a bit yesterday. They sold 1,700 crores. DI has bought a bit. And every dip is getting bought. So yesterday, intraday as well, the Nifty gained almost 100 points from the day's lows. And now what? We're about 3.5% away from the all-time highs. So, you know, we may have to be a bit patient for those all-time highs to come. But come they will. And do you think this dip will continue to get bought?
Well, you know, Sonia, every day is not a Sunday. Yesterday, you know, I stuck my neck out that, you know, the dip will be bought. I think today could be a bit different because of the kind of cues that I mentioned. And also remember, the buy on dips works sometimes because of other factors as well. You know, you need to have some important levels. Yesterday was expiry as well. So obviously, that was also important. 17,850, 860 was the level you spoke about, from where the market sort of gave you good risk reward. That worked out. Today, the risk reward might not be in favor of the longs ahead of the weekend. And that's because, you know, while every dip is getting bought, we are sitting on 7 days of gains. And normally, you know, 7 days is something which the market has a bit of a streak, and after that, it sort of ends. It has to end at some point, right? So there's going to be one dip which may not get bought. And that is, I think, where people would get sort of stuck. Again, you don't want to preempt that. Let me make it very clear. The texture is buy on dip, so that works till the market tells you that that's not working. Look at how extended the market is. The 5-day exponential moving average is 17,818, which is where we had yesterday's low as well, somewhere around that, maybe 20-30 point higher. So maybe that's the level that, you know, you want to wait for, or maybe even the 10-day exponential moving average, which is 17,621. I'm not even talking about 20-day, because, you know, the market has been so overbought. The market can remain overbought, like it remained oversold for so long in the month of May and June. But there are indicators that maybe risk reward wise, it may not be in your favor. If you're a momentum chaser, that may work, of course. If, however, we see again buy on dips play out, then where does the resistance lie for the market? Intraday, 17,950 to 18,000. Like we saw yesterday as well, while the dip was bought, somewhere around 17,950 to 18,000, you had a bit of an issue. And marks like 18,000 normally are taken out with gaps. So the best case for the market is if, you know, it ends somewhere around 17,960, 970, and then next morning you have a bit of a gap up. Couple of other important index to track. First is IT index. It's at make or break level. It's moved to 100-day moving average. It's been in a bit of a bear market rally, the IT index that is. So that is something that I'll keep an eye on, especially given the way the bond yields are beginning to rise once again. The Bank Nifty, on the other hand, remains the strongest index. It's showing signs that if among the three big indices, Nifty, Nifty IT, and Nifty Bank, if there's going to be one index which is going to hit the first lifetime high first, it's perhaps likely to be the Bank Nifty. But let's see if that's how it plays out or not. Prashant, hi.
Guys, hi. You know, those who were expecting that maybe the market will start to reverse, they would have been hoping that today we open with a big gap, which gets sold into. I mean, we won't get that gap higher. We'll probably start lower, unless, of course, things change in the next 60 minutes or so of trade. In any case, I'll keep it very brief today. So the Nifty RSI is inched slightly higher once again. I mean, I put this out yesterday. It's at a 10-month high, remains at a 10-month high. It was 83, it's now 84. So it's overstretched by all, you know, sort of conventional yardsticks, but things can remain stretched for a while. No confirmation yet of a reversal at all. So let's be very clear about that. I mean, the market will tell you, and if you're trading, I mean, you want to follow prices and not indicators and saying, well, you know, this is at a certain level and this is what happened when this got to that level last time or the previous 3 times. You want the prices to lead. And I think that is the sort of a fair thing to do, the right thing to do in that sense. Just a quick word on the dollar index. It ended almost 1% higher. I mean, it's been middling around for a while, but it's basically ended above an important zone, which is 106.89 to 106.94. Basically, crossed 107. But why is this range important that I'm putting out? It's basically, it's taken out, and we could probably show this graphically, a descending resistance. It's taken out the August 5th high, and it's also taken out the 50% Fibonacci sort of resistance of this entire move. So, I mean, it's taken out a couple of important levels. I mean, if you follow this through, you're basically looking at 109 kind of levels on the dollar index, which is not very far from here. We fell from those levels, so let's see if we head back. For emerging markets, I mean, this is an important one, especially for markets which have run up quite a bit. You want the dollar to remain very benign, which has outsized influence on flows, etc. So, will the dollar start to perk up again? I think that remains the number one monitorable from a global perspective. Oil prices, I mean, they're also high by about 3% or so. 96.49 is where Brent oil prices are at. I mean, but I would still look at 96, 97 and sort of, be amazed at how far it's fallen rather than the 3-5% move that we've seen from the lows. I mean, it's fallen $40, more than $40 from the recent high of almost $140 odd a barrel. But I mean, if you're trading, it's all incremental. It's not cumulative. So incrementally, the dollar is higher. Oil prices are a bit higher. And you got maybe slightly overstretched readings on the Nifty here as well. So be watchful, wait and watch, but be sure for prices to tell you what to do next. Sonia.
Okay, well, for our own market, so the Nifty has gained what, about 7-8 days in a row, right? And it's been, I mean, it's been a stellar run so far. So perhaps some profit taking would not come as a surprise to anyone.
I mean, fifth week of gains, Sonia.
Yeah.
And if you exclude the week before 5, I mean, it would be, I think, 8 or 9 weeks straight of gains.
Weeks,
so it's been, quite something.
Absolutely. So, all right. It's been the longest winning streak, by the way, of 2022. So, we're in, some people like to call it a Goldilocks scenario, so to speak. But let's tell you what you can see in the next 2.5 hours. On the equities front, Neelkanth Mishra of Credit Suisse says, while they believe the risks to FY24 EPS are low, for now, in their view, the expected rebound from oversold levels flagged on June 20th have run its course. Credit Suisse remains overweight on sectors cheap on FY24 EPS with lower risk of cuts like financial, cement and L&T.
Okay, let's get you some money market views then. Bhaskar Panda of HDFC Bank says that the US Fed officials were hawkish, indicating their resolve to tackle inflation urgently, which has propelled US dollar to gain further strength as the dollar index rises. He says oil prices also remain elevated, and added to this are China's property sector issues and its impact on growth. He says all the background suggests that the USD-INR pair could again move higher despite the recent positive FII inflows. He expects the USD-INR pair to trade in a range of 79.75 to 80 for the day.
All right, and on the bonds, Bhaskar Panda says Indian bond yields have been range-bound and may continue to remain so. He expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.3% for the day. So we do have a lot of stock-specific action to track today, and in just a bit we'll get to our special top 10 segment. But here are the stocks we're looking at: ONGC, Oil India, NHPC, MTNL, M&M, Indus Towers are on our radar on the back of positive news flow. Then we have Reliance Industries, MRPL, Chennai Petro, Adani Total that are likely to perhaps open in the red because of news flow.